At the beginning of 2024, one of my bold predictions was that Amazon.com would overtake Apple in terms of market cap. Now, considering Apple is a near $3 trillion company, and before announcing Q4 results, Amazon was a $1.6 trillion company. Well, that would mean shares of the e-commerce giant would drastically outperform shares of the iPhone maker over the next 12 months. While the prediction was not only bold, also somewhat of a long shot, but after Amazon reported Q4 earnings, it's not such a long shot. After we go through all these numbers, I'm going to show you the revenue, the profits, the operating profits. We'll come over here and look at the different business units. One thing that we've been talking about with Amazon is the stigma with Amazon for years, decades even, was the company simply only made money on AWS. Well, folks, we are closer to the day where the company actually makes more money on their e-commerce business than they do on AWS. And if that trend continues, shares of Amazon will continue to move higher. We'll come over here and look at the cash flow statement. And I tell you what, cash was flowing over at Amazon in the Q4 to a record number that you rarely ever see in any public company. That cash flow contributed to I'm talking about dramatic rise in cash over at Amazon. We'll take a look at the different business units as well. And we'll come over here and look at this from a technical perspective. It continues to move higher as shareholders are digesting numbers at Amazon, which are nothing short of spectacular. Now, over the last year, shares of Amazon up a spectacular 50% in year to date, chugging along nicely just after about 30 days, up about 2%. The company reported their Q4 earnings after the bell, and they were sensational. We're talking about like Michael Jordan in the NBA Finals sensational. Revenue coming in at $170 billion. Now, I know this is a Q4. If you're e-commerce or a retailer, you probably better have a great Q4, but it goes deeper than just the revenue at Amazon. Revenue increased by about 14% year over year. Estimates for on Wall Street was for about $166 billion in revenue. We put up 170. The high-end estimate was for 168. 42 Wall Street analysts out there. None of them touched that 170 number. Amazon eclipsed it. Now, for the all-important first quarter, where you obviously are going to see a slowdown in terms of revenue, not everybody buying Christmas gifts this quarter, revenue expected to be between $138 billion up to $143.5. The consensus estimate was for $142. The high end was at $143, call it $140. So the company is straddling that line, coming in right in line with expectations, and considering they just put up a quarter where they beat by nearly $4 billion, there's going to be some on analysts and some investors that are going to believe that Amazon could have a high potential to come over the 143.5 estimate that they gave Wall Street. Now, come over here to the numbers. Absolutely sensational, $170 billion worth of revenue, but that's not the full story with Amazon. Amazon has always had high sales and always had a really high sales growth, and it's impressive. I don't want to underscore how impressive it is for a company to put up $170 billion. We're not talking about for the full year here, or for 10 years, or for the entire lifetime of the company. We're talking about for 3 months, this company did $170 billion worth of revenue. And this is why I believe Amazon still has the potential to become the most valuable company in the world, because if you can start to squeeze more and more profits off of $170 billion in revenue in a quarter, $575 billion of revenue in a full year. If you can squeeze more and more profit from that, well, shares of Amazon will continue to move higher. And that's exactly what this company is doing. You're seeing your cost of sales naturally would rise at an e-commerce, fulfillment also rising with your sales, your technology just nudging up just a little bit. They did a very nice job. Look at your sales and marketing in the most recent quarter, where again, you had solid 14% growth on your sales. We'll take a look at your sales and marketing spend, up just fractionally. In fact, that's more or less flat from a rounding perspective. Where most tech companies and most companies in general are cutting cost is in the G&A, general administrative. This is your back office stuff. This is obviously not R&D. It's not sales. Well, look at that. You actually had a decline year over year from $3.3 billion down to 3. For the full year, it paints almost an identical story where you do have tick-ups in cost of sales, fulfillment, and tech, but across the board on sales and marketing and G&A, relatively flat. So look at your operating income over the last year. You earned just $2.7 billion, which is just a small number, especially for a company worth $1.6 trillion. Well, that has ballooned to over $13 billion in the most recent quarter. And for the full year, you cleared $36 billion. A lot of it flows down to the net income side, over $10.6. We'll get to that when we get over to cash flows. Probably the most important stat that you can find on Amazon's financials is the North American e-commerce business. For years, decades even, the company has essentially lost money selling goods, but they make it back with the good old cloud computing AWS business. Well, look at this, folks. Your net sales in the North American business eclipsed $100 billion for the first time over the last year. $105 billion in sales in the most recent quarter. The company did a nice job controlling cost. Look at your operating income ballooning to $6.5 billion. And for the full year, you printed nearly $15 billion. These are numbers we're both expecting to increase as time goes on. Obviously, fourth quarter is going to be ballooned a little bit because your revenue's up, but subsequent quarters, we're going to be expecting solid operating profits here. Your international business is still not profitable at Amazon, but it is churning toward a very close to a break-even number. $40 billion in sales. You lost about $419 million. If the profitability is the same in the North American and international regions, it's probably very close. Amazon's still going to have to grow this number significantly for it to positively contribute to earnings, but we're very much close there. And here's your AWS business, which is not growing like Azure was, which we did a couple of days ago when Microsoft reported. Still got solid revenue growth from 22 up to 24, and your operating income from 5.2 up to 7.1. So it's still the most profitable unit of the business, but notice it is closed. The gap is absolutely closed from $7.2 billion operating income on AWS to the North American e-commerce business churning out about 6.5. You get international turn positive, continued growth in North America, and all of a sudden, the e-commerce giant is going to make more money on the e-commerce business than it does on cloud computing, which again, I think will continue to move shares of Amazon higher. Now, come over here to the cash flow statement. This might be the cash flow statement of the year. You had $10.6 billion worth of net income. It was $278 million last year. So talking about a massive improvement for Amazon over the last year. Look at on the full year, you lost $2.7 billion in net income last year. So Amazon actually lost money last year. This year, you turned a negative into a positive to the tune of over $30.4 billion. The company has a fair amount of depreciation as they own warehouses and a lot of equipment and stuff like that. They had a fair amount of stock-based compensation. You also have some accounts payable positively contribute to cash flows. Folks, buckle up your seatbelt. Look at this net cash provided by your operating activities. Last year, it was $29 billion. Very impressive for a quarter. Look at this, $42 billion. Guys, this is not revenue. This is operating cash flow. There are companies that would kill for revenue for like 10 years or 5 years or certainly a single year. This is operating cash flow for a single quarter at $42 billion. It was nearly half of the operating cash flow for the full year as you printed $85 billion worth of operating cash flow for a full year, 46 last year. This is where you can start backing into a valuation with Amazon. $1.6 billion on operating cash flows over the last year at 85 with this massive improvement. I don't know how much more improvement you can get out of Amazon, but if you can improve that number even more over the next year, could you eclipse 100 billion in operating cash flows? That means this company would be trading at what, 15, 16 times forward operating cash flows, which wouldn't be really richly valued. Now, what is the company going to spend this $42 billion of operating cash flow? Well, they're still spending on a property, plant, and equipment, but notice you have Andy Jassy really tightening the belts over at Amazon. 16.6 last year on property, plant, and equipment, down to 14.6. Look at the full year, 63 billion last year, down to 52. So you're driving higher revenue, higher profits, and you're actually spending less on property, plant, and equipment. That's the company's largest investment. They They do have some debt, which I'll show you here on the balance sheet. They paid that off to the tune of about 6.4 in the most recent quarter, 25 over the last year. But you have 42 billion here. You only spent about 12.6 on investing. Financing activities only chewed up 6.8. So you added $23 billion of straight cash, homie, to the balance sheet over at Amazon just in the last quarter. So when you come over here and look at the balance sheet, you see your cash and cash equivalents, boom, $86 billion and some change on cash, whereas last year you had about $69 billion. Your total current assets, which includes things like inventory and accounts receivable, went from 147 all the way up to 172. They did pay down some long-term debt over the last year, 67 down to 58 at the borrowing rates that these companies borrow at. It's not all that concerning. You can also come over here to the profit and loss statement and see how much that debt is costing them, balanced off by the amount of cash that the company has. And you see actually in the most recent quarter, they're actually earning more on their cash than they are spending in debt. For the full year, it's basically neutral. So when you see a mountain of debt like this on a company's balance sheet, also understand that it's offset by the interest that it earns on its mountain of cash, which Amazon has a mountain of. Now, moving over to different business units, your AWS segment grew at 13%, which is somewhat disappointing, I think, for some investors, but not disappointing enough to send shares lower. Also, its cloud division, obviously slightly more mature than Microsoft, and certainly much more mature than Google. Still solid growth there, and you're growing it off a big top line number. Everything else looking absolutely solid. Your online stores grew 9%. Your physical stores, this is your Whole Foods, things like that, still growing at a single-digit clip, but not too bad. Third-party sellers still growing at about 20% clip, although we're seeing that start to flatten out a little bit. Your advertising business, big advertising quarter in the fourth quarter. Amazon reaped the benefits of a 27% growth rate there. Subscription services is mainly Amazon Prime, still growing at a nice 13%. In your other category, which I believe is some content licensing from MGM Studios, also growing at about 9%. Folks, this is why the shares of Amazon in the after hours popping up about 8% in the after hours. One of the few FANG stocks or Magnificent Seven or whatever you want to call them that have not retouched the all-time highs, which for Amazon are all the way up here at about we'll call that 190. Looks like only a matter of time this company retests these highs at 190. You'd expect sellers to materialize up there at 190, but considering the absolutely strong results that we're seeing with Amazon and a dramatic shift in this company's business model where they only made money on cloud computing and they lost a ton of money on the e-commerce business, those tides are shifting. Likely by the end of the year, the company will make more in their North American e-commerce business than they do on AWS. And on top of that, their international business seems like it's about to turn the corner from a profitability perspective. If the company continues to cut cost and drive profitability, you're going to have at least one, maybe even 2 quarters a year where this company produces over $40 billion worth of operating cash flow in a single quarter. That dumps a mountain of cash to the balance sheet. And if the regulators in Washington, D.C. didn't have their panties in a bunch, this company could at least buy a vacuum maker for $1.4 billion. But they're not going to allow them to do that. So that means Amazon is going to continue to invest internally in their current business model. And right now, that business looks like it is firing on all cylinders and maybe getting a little nitric oxide boost as well for the kids. Hopefully you guys enjoyed today's video. We'll be back again with more. Until then, good luck with your investments.